Hello everyone, my name is Christian. Welcome back to Tekpon. Today our guest is Peter, the head of insights at Carta. Hello.
Hello, Christian. How are you?
Good. Thank you for joining the podcast. I appreciate it really much.
Thanks for having me.
Please tell us, what is Carta?
Carta is an equity management platform. So we help founders issue equity to their employees, to their advisors, to their investors, and then we help them track who owns what portion of their cap table. So as they grow from just idea stage all the way up until they IPO.
That's amazing. What would you say is the biggest problem that you solve for founders?
The biggest problem is ownership tracking, number one. So who owns what percentage of the company, which sounds very easy, but as you start issuing more and more fundraising and as you go through different venture rounds and all of those rounds have different terms, it can get really, really difficult to manage that out. The second thing we do, which I think is the second problem that we solve, is helping the earliest companies get started on their cap table journey for free at the beginning. So this is a problem in that it used to be cap tables were pretty expensive, et cetera. But now we have this program called Carta Launch where companies can get onto Carta completely for free. And so they raise their first $1 million and they can use data rooms, they can issue safes, they can do all these cool, interesting things. But it's very customer aligned. Like we grow as you grow.
That's amazing. So everyone under 1 million in the raised funding is totally free.
That's it. Exactly.
And you have multiple products, or is it the main one?
We have a lot of products. Yeah. Carta sits like in the middle of you can imagine us, we grew up serving founders and then we realized that a lot of the problems that founders have are kind of mirrored by some of the problems that venture capitalists have when they manage their funds. Right. So we actually ended up building software that help fund managers manage their funds better too. So we kind of are on both sides of that marketplace. So we get to see all sorts of interesting data on what's happening across startups, both from the investor perspective and from the founder perspective.
But there is no direct marketplace. It's just software for founders, software for investors.
No direct marketplace. No, we want to make sure that we're serving everybody equally. We don't want to favor any companies over another. So unfortunately, we cannot introduce you to your next investors.
Yeah, for sure. And about the products, can you walk through them?
Absolutely. So Carta Cap Table, that's the core product for equity management. For the other main product that we have for founders is called Carta Total Compensation, which at the very root of it just helps you pay your employees correctly. So we have great data on salary and equity for tech startup employees. So we can help you, as you hire that next engineer, what do you pay them in salary? What do you pay them in equity in cities across the country or across the world?
Right.
We can help with that. And then the last one that we'll touch on today is fund administration. So that's helping venture funds, particularly emerging managers, manage their fund in terms of taxes, audits, valuations, all the back end stuff so that they can focus on investing in founders.
That's amazing. And the platform is basically a software as a service, right?
Exactly. Yes. Core SaaS.
And
a lot of service thrown in there, to be honest.
Yeah, but it's basically a subscription at the base.
Yep.
And can you share the pricing for?
So $0 to start for founders.
Yeah.
And then it grows up as you grow up. As you get to be like Series B, Series C, it's a couple thousand a year. The pricing for funds is very, very dependent on how big the fund is. So if you're managing $1 billion, it's a different price than if you're managing $10 million, but we can kind of right size the service to you.
That's amazing. And you are the head of insights. Please explain what's your role.
Yeah, it's a weird title, isn't it? It's so head of insights means that because we serve all of these cool parties of the venture ecosystem, especially here in the States, we have access to this aggregated data pool where we can just draw out really cool narratives across startups. So my job is to make our data more useful. That happens in two ways. First one is all external stuff. So cool research reports and social graphics and podcasts and all that kind of stuff. Mm-hmm. And then the second is actually putting data directly into our products. So you can imagine if a founder is starting to fundraise and they want to figure out what's the market for this fundraise. Well, it's useful to have that data show up in a little light box right as they're in the product, as they're getting ready to do all that work, so that it's right there at the moment that they need it. So that's my job, is to make our data more useful.
That's amazing. Is it mostly from the US or is it global?
It's global, but I'd say a lot of our insights are US focused. We do have cap tables in, I think, 80 plus countries now. So quite a few across the world. We're pretty have good, penetration in market in Canada and Latin America, and then increasingly in Europe. But we haven't done a lot of insights work there yet. Hopefully, as the years go on, we can get enough data to really start putting out the same sort of reports for global equity that we do for the States.
And are these insights for free?
Totally for free, yes. So you can find them on Carta.com. Actually, very soon, if it's not up when you hear this podcast, apologies, but very, very soon, we're going to be consolidating all of our data work into one website page, which is Carta.com/data. And that should be where like everything lives, and it'll be really cool. It's been a headache to get this off the ground internally, but I'm super excited for it.
That's amazing. And Carta is basically the biggest player in this market, right? You invented this market.
I'm not sure if you say we would invent it. There were some cap table providers before us, but we're definitely the biggest player now. Yes, by a lot.
Are you familiar with the founding story? Can you share it with the audience?
Yeah, so our founder, Henry, and his co-founder, Manu, and a couple other folks kind of saw this problem that before Carta, the cap table was not digitized. So it was literally sending stock certificates back and forth, paper ink and everything. And as you can imagine, especially at the earliest stages, that gets really tricky really fast. If you're just emailing back a spreadsheet and it has just a percentage of ownership, and you can imagine if two people disagree about what that percentage should be over time, it gets really, really contentious. So the first founding idea was, let's take all those spreadsheets and Word documents that are being emailed back and forth, turn them into SaaS software. And then when you actually build a source of truth, you then can do really interesting things with it. So the first thing, as we walk up the founding play, the idea was first you secure the asset. So you actually make it transparent and say, what does everybody own? That's the first step. The second step is then valuing the asset. So we can help companies with their 409A valuations and all these kinds of things that actually say, how much is this business worth? And then the last stone is transacting on that asset, be it through secondary sales or through other transactions of stock. At the end of the day, when someone buys a portion of a company, they actually just get equity, and that equity flows through the Carta platform. So it's secure the asset, make it transparent, value it, and then transact on it was like the sort of the founding map.
That's amazing. And how big is Carta today? Do you know the total number of employees?
Yeah, so employees, we are, I don't know exactly, maybe 1,500, something like that, pretty big. And then in terms of the total size of companies and universe we touch, it's close to 50,000 startups on the platform who are, if you just add up the value of those 50,000 startups at the moment, it's like $3 trillion worth of equity value. I think we have 1 million plus employees on the platform who hold equity. So it's getting pretty big.
And let's say I'm an employee working at a startup. If my company uses Carta, I can log into Carta and see my actual share?
Yep, exactly. You can see your ownership. You can exercise those grants. If your company has the stuff enabled, you can also get some tax help. So like, hey, what do I do about these? It looks like I might have a tax bill coming up from these shares. What does that mean? How does that work? And we do a ton of education for employees. I think it's something that we really deeply believe in, that employees should understand their equity a little bit better, because that's a big part of their compensation. And so it's, they deserve to understand exactly what it means and how it works. So we have a ton of educational resources on Carta.com to help employees figure out what's going on with their equity.
And you said 1 million employees?
I think we're actually at over 1 million, like 1.2 million employees on the platform. Yeah.
That's amazing. And
all from private startups, so like nothing past IPO.
So you don't work for any IPO companies?
Nope, no public companies. We're very, very startup focused.
Because it wouldn't work, or because it's not in your focus?
Just because it's not, there's a ton of people who already focus on public stock, Charles Schwab, Fidelity, all those players that own the actual public stock market. So we say, look, we're going to focus on what we're fantastic at. Maybe in the future we'd go do public stuff, but not in the roadmap right now.
And did Carta raise money?
Yes, we have raised money.
It's not
quite a lot.
You're eating your own food, right?
Oh yeah, we raise money on Carta for sure. So it's we are dog fooding our own product, no doubt.
That's amazing.
I own I own a bunch of equity through Carta as well. So as I log in and look at Carta stock on Carta, it's very meta. Yep.
Yeah, and out of those startups, what do you say are the most common industries or trends that you see?
Yeah, so across those, call it 50,000 or so startups, the most common industry is still B2B SaaS. So B2B enterprise SaaS is the biggest sector. We also have a lot of the other sort of top 5 sectors would be fintech, consumer, biotech, and health tech. But there's everything from renewable energy startups to logistics to social networks, like anything and everything that you can imagine. In terms of trends, I mean, we can get into a lot of trends on how fundraising has gone for VC-backed companies over the last couple of years.
Please.
I don't think anybody is too surprised that it's been a much harder couple of years than it was in 2021 when everything was, all the interest rates were low and everything was moving really fast. But we are starting to see fundraising pick up a little bit in the last couple quarters. So maybe there's some optimism on the way for founders.
Nice. And in terms of challenges, I'm curious to know, you joined 3 years ago, you said?
Mm-hmm.
What was your biggest challenge since you joined Carta?
For the business or for my role in particular?
For your role in particular.
I think, well, one, there's a brand awareness thing. So people definitely know Carta, which is fantastic. But I had to go out and teach people, like, not only does Carta have these wonderful products, but we also can help you with these insights, these data education. So it was kind of building a separate brand around data and insights. That took longer than I thought it would, for sure. But it seems like we're getting a lot of good awareness now. The other big challenge, I think, is just every startup is so different. They have different needs, they have different capital ideas, they have different fundraising challenges. So it was kind of doing a lot of listening to our customers and understanding what data is actually going to be the most impactful and how do they want it delivered, because there's a ton of founders out there, and I don't blame them, who are not going to spend time reading a PDF, right? So I need to get them that data in some way that they're going to consume it quickly and use it in their everyday lives. So it's kind of like experimenting with content to make it fit into the founder's life. Took a little while.
Yeah, I can imagine. And I'm curious to know about your journey. Or about the story, let's say, of you joining Carta, and after that, how you started your career.
Well, my whole career has been in early stage startups. So I founded a company in college, and then after that went directly into a very, very small company. I was employee number like 12 or 13 at this place called Public Relay, which was a media intelligence startup. And that's for anyone who's listening, who's considering joining a startup, I won't say I got rich out of that for sure. Like it didn't really result in any monetary gain, but the skills I got from joining an early stage place were amazing. I mean, you get to try so many different jobs that you may love and you just don't even know it yet.
Exactly.
So I, data analytics and Tableau and business operations and marketing and, just did a lot of different things there. And then actually, I'd been there for a few years and then COVID hit. And when COVID hit, as we all know, we were kind of in our houses for a few months there, and it was kind of, everyone was pretty nervous. And I'm a big data nerd. So I went out and found data sets and started visualizing and charting them online and like showing what was going on with COVID across the US. Okay. And the Atlantic magazine actually got in touch and said, hey, do you want to help run our little COVID project that we're starting with your charting and visualization? So I ran that Viz team for a year, and that was a really unbelievable experience. All these people that had never met each other before in a Slack channel, just like trying to help educate the world about COVID. And that's where I figured out that this sort of data insights motion, I think it's something that a lot of SaaS companies in particular, if they have a great proprietary data set, can be doing more with, because it's a wonderful way to be in somebody's inbox or in their social channels. And you're not selling your product, you're just giving out value. You're just telling them what the market is like. Yes. And it just has this brand halo of authority and trust, and you're actually very customer aligned. So I reached out to Carta and said, hey, would you be interested in me coming on and seeing if there was a way to use this data better? And they were nice enough to let me join.
That's amazing. So you had the idea of building this.
Yeah. So from the COVID project, there's I was putting out maybe 10 to 20 different charts a day, and people were just insatiable, hungry for more data, more analysis. And I went around and looked and I said, look, I love startups. I really think that this is a cool new motion for marketing and brand. Where would be the best place to try this? And Carta was top of that list. I mean, such an amazing data set and just kind of unexplored. There'd been a couple of fits and starts here before I got here, but I came in with the express purpose of making Carta a known source of data for the whole startup community.
That's amazing. Unbelievable. And if you would have thought 4 years ago about this, you said no way.
Yeah, maybe not. Maybe not. The timing definitely had to be right.
Yeah, because of the pandemic and everything. That's crazy.
Yeah, I mean, it's obviously really wish the pandemic hadn't happened, but that was a personal silver lining, I guess.
And you also popularized this role of head of insights.
I don't know if I want to take full credit for that, but I do think that there are a lot of, based on my inbox and stuff, there are a lot of companies who are interested in this kind of marketing motion. As everything gets more crowded and, everybody's content kind of feels the same, if you have proprietary data, it really can help you stand out. And all you need is a marketer who's willing to learn some data visualization skills. And then you can just get started. And the amazing thing is the feedback is so great because you're putting something out and you get immediate feedback from your audience on yes, that was useful. No, I want to see X, Y, or Z change. Basically all my best ideas come from people on LinkedIn now. So it's very simple to keep the motion going.
Yeah, and people actually need this insight and are craving for it.
Yes, exactly. Yeah.
And what would be your best piece of advice for a starting SaaS founder?
Best piece of advice is that starting right now, two things are true. One, it's a difficult time to start a company, fundraising is hard, all of those things. But two, there's going to be a lot more founders in the future, I think. All of these spaces are going to get more crowded because the cost of starting a company seems to be going down. With AI tools and compute and all of these things, it's easier for anyone to sort of spin up a small competitor to some standard ideas. So yes, when you look across that landscape, what does that mean for founders at the moment? It means that they're going to need to do a lot to stand out in terms of attention. So not to say that you need an insight strategy, but you do need a differentiated distribution strategy to say that I think this is why a lot of founders are investing in founder brand or social channels or trying to figure out other forms of awareness building, because you can have the best product in the world, but if nobody knows about it, it doesn't matter. And if it's going to be really, really crowded in all of these niche spaces, standing out is going to be harder in some ways than building the best product, at least at the very beginning.
I totally agree. And if you want, we can walk through some trends that you see, some recent insights that you shared, if you are okay with that.
Yeah, let's do it.
Yeah, so let's start with fundraising. You said in the last quarters, things are starting to move a bit, right?
Starting to pick up just a little bit, yeah. So to put some numbers around that, every quarter we track the price rounds that are completed on Carta for the US. Mm-hmm. In just to give you a sense of how wild things got in 2021, there was a quarter, I think it was Q4 of 2021, where the startups on Carta raised nearly $70 billion in a single quarter, which is a wild amount of money. Fast forward to Q2 of this year, and we're at 20 billion. So from 70 to 20. So big drop.
Yes.
However, it got as low as 15 at the start of 2023. So, there's been a gentle sort of inching back up every quarter. It's about $1 billion or $2 billion better than the quarter before it. But that's maybe some cold comfort. There are the fundraising is happening. It's just much slower than it was 2 years ago. So hopefully we see the back half of this year, it's even better than it was in Q2.
And do you analyze data just from Carta customers?
Yes, basically all of our metrics are just Carta customer data. We'll do some compare and contrast with like broad economic trends, but all of our data is from the Carta platform.
In terms of, let's say, industries, do you see any, probably AI, it's growing, right?
Yeah, AI definitely is all the headlines are right. That's the industry that is soaking up the most investor attention. Something like 25 to 27% or so of all funding on Carta went to AI companies last quarter.
Wow.
So that's a lot, but it's certainly not everything. There's still quite a lot of fundraising that's happening with non-AI companies. The other thing to mention with AI is that it's not the same in every sector. I think when we think of AI these days, we think of ChatGPT or like Gen AI tools, which are certainly a growing category. But there's also AI biotech, AI health tech, AI robotics, AI energy. There's machine, and some of them call it AI, some call it advanced machine learning. It kind of spans the gamut.
Yes.
So it's sort of all over the place. The other industries that I think are doing well, founders listening in may disagree with me, but they're doing relatively better. There are places like fintech, which were really, really hot in 2021 and are not quite as hot now, have gone down quite a bit. And then there are industries like robotics, which was pretty hot in 2021, and it's not quite as hot now, but it didn't decline nearly as much. So like relative funding held up a little bit better in there and in biotech. And what we think is happening is that investors are getting comfortable or a little more comfortable with investing into stuff in the real world. So instead of just investing in SaaS, they invest into hardware, robotics, biotech, things that actually have tangible end products, which is great. I think we need both, so it's cool to see that maybe some of those physical products are getting a little bit more love than they used to.
And in terms of investors, do you have any trends? I mean, what types of funds are investing or sizes, PE firms? Yeah. I'm not sure what you can share.
Yeah, so we're actually going to start putting out data on funds pretty soon here. I think in the next couple of weeks, we're going to start doing that for the first time.
Nice.
I will say that, if you look across fundraising, it's definitely true that the biggest funds are the ones that have the easiest time raising right now. The Andreessen Horowitz and things like that. If you're a mega fund, you're probably having not that many fundraising challenges, whereas emerging managers who are often writing the first small check into these companies, they have had a harder time fundraising. They're functioning a lot like startups, They're trying to get fundraising from their limited partners, just like founders are trying to get fundraising from them. So it has been a pretty tough year for venture fundraising.
So for both sides, basically.
For everybody. I mean, the thing that people in startups don't talk about enough is just the effect of interest rates on this whole sector. It can feel like, startups are a completely different economy and they function on their own. But when interest rates are high, there's less money that goes to startups. And when interest rates are low, more money goes to startups. It's just a function of how risky the alternatives happen to be. So, if you want to know if startup fundraising is going to get a lot better, that the interest rate in the US is a big part of it.
Yes. Also, is there a newsletter where people can sign up to receive daily insights or trends?
Oh, definitely. So actually, we put it out once a week. Mm-hmm. It's called the Carta Data Minute. Mm-hmm. And so if you just Google that, you can find the link, and maybe we can put it in the show notes as well. But yes. Yeah, I write that once a week on Thursday mornings. So some cool chart around Carta data.
Great. In your opinion, probably you'll say right after starting, but when would be the right moment for a founder to start using Carta?
I mean, right before starting. No, it's the best time is right after you incorporate. Mm-hmm. So if you use a service like, for instance, Stripe Atlas to incorporate, which is a wonderful service, there's actually a button right when you complete Stripe Atlas that you can just click it and auto-create your Carta account and do all the data or the processing, paperwork kind of stuff there, which is amazing. And again, that Carta launch account, which you'll start with, is completely free. The advantage of doing it early is that all of your investment will be on Carta from the beginning. So there's no disagreement. You don't have to upload an old spreadsheet that may be out of date or people disagree about. But you can join Carta at any time in your fundraising journey, of course.
Thank you for sharing that. Can you also share more about the services that you offer? So we understood the products, but what other interesting services or features does the platform have?
Yeah, so there's tons of stuff. At the earliest stages, when you're talking about, what does a founder need to raise their first, call it $1 million or so, I think it breaks down into 3 places. The first one is you probably, if you're in the US, are going to start by fundraising on SAFEs, the simple agreement for future equity.
Yes.
So you can create SAFEs, wire them, fund them all through the Carta platform for free with like 5 or 6 clicks, which is great. And the moment that you create a SAFE, you actually have like data about what is market for those SAFEs right next to you as you're creating it. So that's very easy. The second is a data room. So the advantage of data rooms is oftentimes when you're talking to an investor, they're going to ask for things like, okay, I'm interested in your company, but I want to see your customer list, your revenues, if you have it, all that kind of stuff that's very private. And so data rooms are a great way to have that information, and then you can grant access to that information on a one-to-one basis. So just this investor with this email can now access this kind of data from us. So safe, secure, and it's right because it's coming straight from the system. The last thing that I'll mention is that you're going to be able to issue equity to employees. So as you start growing, you're going to want to issue them equity. It's a couple clicks and you can grant them equity around, so you bring on that founding engineer and you want to give them, 0.5% of the company or so. You can do that through Carta, and then they can get really excited about their ownership and building something amazing, all that kind of stuff.
Well explained. Probably Thanks. A basic question, but for, let's say, starting founders, why should they offer their employees stocks or say shares in the company?
I think sometimes we take it for granted in the US that everyone would do this, but I actually think it's a fair question. Why should you offer your employees equity at all?
Yeah.
I'd say that there are a couple reasons. One, especially if you're in the States, it's going to be very difficult to attract the best talent without incentivizing them with ownership. Secondly, and I think this is more of not a moral question, but just like a personal viewpoint, is these people, especially these early employees that are joining you, they are the foundation of this business that you're going to build over the next decade. And they are taking a lot of risk to join your company over joining a big tech startup where maybe their salary would be higher and it's a safer path and it's just like much more secure, right? Just like you as the founder are taking a lot of risk. Your employees at that early stage are also taking a lot of risk. So with their careers and just there's a whole opportunity cost, and they deserve to grow with your business just as your ownership will grow. So I think it's an amazing way to have everyone working towards the long-term health of the business. We've all seen how early employees at startups that do really well are then either turn into founders themselves or recycle that money back into other angel projects. I think it's one of the reasons why Silicon Valley is so amazing is because so many early employees, what did they choose to do with those winnings, with that finance? They put it back into startups and created new companies, becoming angel investors and stuff. So it's just an amazing way to see the ecosystem kind of give back.
Thank you so much for sharing this. And I guess most startups on Carta offer their employees shares.
At least every single one offers at least someone some equity, yes. So I do think that at least in the US, I'd say it's probably 80% or more of startups offer equity to their employees, probably maybe higher, 90%. I know that's not the case across the world necessarily.
Do you have data on how many startups are there in the world?
I don't have good data on that. That's a really interesting question.
It's also changing day by day, right?
Yeah, there's no right answer there. It's
but
also that
you have 50,000 on the platform.
We have 50,000. Yeah,
you have room to grow, right?
Yes, quite a bit, I bet. I also think that it just depends on what kind of startup you want to build. There's a difference kind of between startup that wants to take venture capital money and startup that wants to bootstrap or just do it themselves without any outside financing. We have bootstrapped companies on the platform if they want to offer equity to their employees, but most of the companies on Carta are trying to get money from VCs.
Yes.
So that's the path that they sort of chosen. Not to say that's better than not.
Yeah. For sure. And for most companies, do you also have data on revenue and customers, or this is an optional for those that want to show it to investors?
Yeah, we would just pass that info to investors for the companies that want it. We actually don't track that kind of stuff in the databases. It's something that we're asked a lot. I kind of wish we had more financial data, but we don't at the moment.
yeah, it's mostly about fundraising. Okay, I think those are my main questions. Everything that crossed my mind, but now I get a better understanding of Carta and what you do and how you help founders. But if you have anything else to share before closing?
I think just that it can seem when you read the headlines right now that it's a really tough time around venture-backed startups in particular, and the headlines seem to be full of doom and gloom and all that kind of stuff. When I talk to early stage investors, they're actually incredibly excited about the companies that are being started right now because they can move so much faster. They're staying smaller for longer. They're in terms of headcount, but they're doing unbelievable things with LLMs and different business models that are kind of new and exciting. So I think over the next couple of years, there's going to be this renewal of early stage startups. So if you're thinking about founding a company, now is actually a really great time.
Thank you so much for this. You're a great person. Thank you so much, Peter.
Absolutely. Thanks for having me on.